Good morning, everybody. Good morning. Welcome. Week 32 of a year, the first complete week of August. Wednesday, 9 of August. Today we are summertime here in the Northern Hemisphere. Winter time, we are one. Welcome to another session of live analysis. Yeah, you are, yeah, obviously the key players. I'll tell you a little bit about what's going on, but obviously if you have a question, go ahead. Hello, Joel. Hello, Joel. Welcome. Let's start. Let's start very fast with what has been going on today, last night, maybe mainly as data. We had a CPI in inflation data in China that once again showed the situation of decreasing prices, meaning basically, yeah, that the recovery, the economy is faltering, and yeah, so less pressure on the demand side helps to keep the pressure on prices lower. So we had a decrease. It was slightly better than expected on a yearly basis, minus 0.3%, but is sure coming down from positive data, and this is not good. Well, let me just let's skip myself as an image for starting. What else? We today not really plenty of data. We have some another big name reporting at the end of the day. Walt Disney. We have an implied volatility before the earnings of close to 5%, meaning dealers expect a move up or down that could reach approximately 5%. The title is, just start having a look at this. Come on. As we're here, let me share with you the screen. 1 second there. Okay. Walt Disney. Oh, I don't know why it doesn't allow me. 25. Oh, please. Well, here you have Walt Disney. Yeah. Here you have Walt Disney. You can see this is very long term. You can see how it has been going down for 2022. It's not really picking up that much in 2023. The area close to 84, 85 has been a support since 2015, a very strong support. We are very close to that. We last closed at 88. As said, a 5% implied movement would mean basically a move of around $4 that would take, if it were on the, if earnings will miss, it will take us very close or just sitting on the support level, otherwise on the break of this descending wedge, let's say. Well, said this, we had some data in these days. Yesterday, the HICP and the CPI in Germany, they have been in line, flat by the way the previous month. We had in the morning of yesterday more horrible data from China, where both exports and imports collapsed double digit. And well, we will see now the reaction on the dollar against the yuan. Let me just have a look here at the Chinese index. We have added it recently. If you want to have a look, this is a new instrument that's very interesting to trade. Second largest economy, not doing so well. A lot of problems in the real estate. However, 12,420 was very close to this year lows. It was not doing great. The Chinese and the stock Hong Kong exchange, you can say, it's trying to gain traction. There's a lot of rumors and a lot of intention also by the central government. Hello everybody, hello Favor, Carawa, Sola, Gottfried, hello. To sustain the economy. So we are seeing some kind of attempt to take off from very close to this year highs, as we just added this instrument. We don't have a lot of history behind us, but here you have a rally, some kind of consolidation. Look, technically look like a flag, no, like a wedge. So yeah, you could certainly have a look at this. As we are starting from Far Asia, let me go to dollar against renminbi, the yuan renminbi. First of all, let me find it. Here it is. It is quite interesting, but because it's once again pushing the dollar against the yuan to the upside. It's very close to this year highs that have been touched just in July, close to the 7.30 area. We had some higher highs last autumn. Let's say price traded above 7.35, but we are very close to a multi-year low for yuan renminbi, so a multi-year high for this cross. And well, it's interesting because yeah, it's a sign of a weakness of the economy, especially in the past, when last year when China was even more export oriented. Not that now it's not export oriented, but some other wheels of I mean, some other factors, like also the internal consumer is gaining some strength. Wages up a lot during the last 5 years in China. Retail sales, okay, now they have come down a little bit, but just 3 months ago we had, for example, a push in retail sales of almost 20% in China. All right, in respect to what happened the previous year, that was a disaster. But anyway, well, what I'm meaning is starting, let's say, to shift a little bit away from a totally export model. Not yet, it's still a big exporter, still a factory of the world. So what was happening generally that central bank let the currency depreciate for the exports in the past. To be honest, last night, this night, there has been rumors of big Chinese bank doing the opposite, trying to slow down the fall. You can see that during the last days, yuan has fallen from 710 to 725. Okay, so 50, not big numbers, but yeah. It's a 2%. It's a 2% just in since the beginning of the month. All right, in these first days, the first 10 days, 7 trading sessions. How much have they been? No, 8 trading sessions, so quite a lot. This morning, apparently, some big banks, I suppose ICBC, this kind of names, were selling foreign currencies while buying Yuan. Anyway, I am still staying here because of the data. We are going backward. We're going backward. Started with CPI this morning. Trade balance awful, as I said a couple of yesterday, and sticking to blow. You can't hear me. Does anyone else has this problem? If you can please confirm, tell me yes or not. That would be absolutely helpful. I hope, Dublo, sincerely, you have a first time, you have a first one saying that you cannot hear me. So, well, hopefully, others, please, you, everybody else, let me know. Otherwise, please, Dublo, try to check your settings, right? And well, going back, we had on Monday morning industrial data in Germany, and how not, they have been bad once again, down 1.5% on a monthly basis, much worse than expected. And yeah, but this is not a surprise. Sadly, this is not a surprise. And as we're here, let's jump from China, from currency. Let's jump into indices. We're talking about Germany. Let's have a look at its main index, the DAX 40. You can find it with us named as GER40, GER for Germany. So here it is. Here you have the DAX. Well, despite the very bad conditions, yes, okay, now you can hear me, the blow. That's fantastic. Despite the bad economic mood, DAX is very close. It is as well, like many other two, it's well, like our European indices, to its all-time highs. Actually, just at the end of July, it had touched new all-time highs. It was 31st of July, 60,500 has been a new all-time high. To be honest, it has touched it also on the 28th, Friday 28th of July. And right now is, as you can see, it's correcting a little bit, but we are so close. We are absolutely that close to the highs. I mean, let me check if I am able to move this. Because we're trading close to 16,000 right now, meaning that we are trading less than 4% away from all-time highs. As you can see, we are back to have tested 15,700, that at least since the springtime has been a kind of support. I mean, it has moved DAX within what is quite a tight range. Most of the time has been between 15,700 and most of the time between that value and 16,100, with several excursions well above 16,300 and so on. It's just now below the 200 moving average. Have a look at this, because the 200 moving average is obviously a long-term indicator, something that some long-term investors look at as well. The price is compressed between the 200 moving average and the 50 period moving average, 50-day moving average. And as we are talking about indices, let's switch to the global risk benchmark, to the US indices. Let's switch to SP 500. We were talking about moving averages, and well, SP 500 is well above, like other US indices to its 50, 100, 200 moving average, it got inside yesterday of quite close, at least to the 51. To be 51, yesterday we were as low as 4,466, just half a percentage below it's the 50 moving average. You can see that right now the 200 moving average is passing at 4,130. That means that the price is almost $400, $400 above its longer term moving average, the one generally used, custom long one. 370 points, that would be 8% higher. So it's quite a big distance. Sadly, we have this problem starting after the COVID in the chart, but it's quite a big number. Anyway, at least here you can see not that steep long-term channel. You can see several trend lines. The first line, the step one, has been broken. Has been broken last week. It all started as when Fitch downgraded US. You certainly know Fitch downgraded a long-term debt rating to the second best step. So not that drama. But it lost the AAA, the famous distinguished AAA. But for example, Germany is still holding with many other European countries. Denmark, I don't know where about Denmark right now, but anyway. But yeah, it was a good excuse. It was a good excuse. You can see that some indicators. Okay, the rally, you are all aware that the rally has been huge since the beginning of the year. You can see that some indicators were getting into overbought zone. By the way, I used to draw the overbought zone above 70. Generally, everyone stick to 70, put to 73 just to well, to have it even higher, not to have false signals. So SP500 has been in overbought, has been also diverging outside of SP500 for some time, and yeah. So it has been a very good excuse, very good excuse, very good bad news where to take some profit, because don't forget that. Let me check it. Here we'll let you know immediately that since the lows in October, SP500 has gone up 32%, and since the beginning of the year, SP500 has gone up 20% at some point, now retracing a little bit. And obviously, as you well know, it has not been the only one. Here you have Nasdaq, this one, yes, that has been the best performer for a long time. We have repeated, oh, Dwi Maisa, thank you very much for the gold question. Okay, let me, wait. Where is your, here it is. I was missing that. Let me just finish with this one, and we will switch actually to gold. All right. Well, all right. You've seen it already. Sometimes Nasdaq has been the best performer, up almost 50%, more than 45% in January. So we had this break recently during the last months of 50,250. That was quite an important level. Let's say that the area would have been, the area of a break would have been 15,250 to 15,400, mildly. We stayed above it for some days, and now we are back into it. Look at who is come to meet Nasdaq, the moving the 50 moving average, that has actually worked as a support yesterday. Today doesn't look it's doing good. I it's basically flat, but it's retreating. Looks like it's retreating. Let me It's going down right now while I'm talking. It's retreating from, it's pulling back. I want to switch these words to pulling back. All right. Well, all right. As I had this question, let's move to gold. Come on, because this is the interest of many, I know. So let's move to it. Let's move to it. By the way, if you want to use, I don't know if you use MT4 on the laptop or only mobiles, or our very nice application where you will also receive our updates, our push notifications. But if you don't use that and prefer the MT4, this profile function is very useful. You can categorize things and immediately have the portfolio, the monitor, whatever you like immediately. Right, high oil. By the way, oil. See that oil is up again. But yeah, let's stick to gold. Let's stick to gold. Gold. Listen, once again, I repeated. I mean, things doesn't change generally from one day to another. All right, long-term factors. And well, I've been repeating for months that for a financial speculator, I mean, not for a miner, not for a producer, not for a physical trader, that's not a big advantage, a big interest in being long gold. Because why? Because gold somehow doesn't yield anything, and right now it can get a lot of interest of yield in many other places. By the way, it has a very high inverse correlation with real interest rates, gold, and they have recently, you know that at some point after the Fitch downgrade rates, I don't know if you follow them, that spiked higher again. The 10-year went above 4% again. I think it reached almost 420% in intraday. Yesterday it was back below 4% again. But all of this was saying that real rates also had a new multi-year. Don't ask me really. Well, yes, I will tell you. A new multi-year high. We should go back to 2009 to find such high real rates, 10-year real rates in US at 182%. So this is negative for gold. This is negative for gold, and it's still in a mid-term downtrend that has started at the test at 2077, that as for the moment look like a long-term triple top, technically, according to technical analysis. So well, we had some positivity in early July. We are now retracing the rally. I mean, the gains from 1800 to 1980 have more than halved right now. I don't have Fibonacci here, these kind of things, but I'm sure that it should be retraced at least 62%, at least. It's well below 50%, clearly you can see. The price is between the 50 moving average and the 200 moving average. The 200 is always the white for me, and the orange one is the 51. Right, so rates are really high. They are at the highest level since 2009. And so why gold is so high? It should be much lower. It should be much lower. Probably at some point in 2011 to 2012, it went as low as 1,200, if I remember correctly. Let me check. Give me 1 second, please. Yes, well, in 2019, it was trading at $964. All right, 2009. Just saying. But why? A very good reason for price of gold staying so high is central banks that are hoarding on it. So they just give okay, in H1, the first 6 months of a year, it has been the highest rate of purchases by central banks. I would not say ever, but for sure in the last 20 years. Okay, why is this happening? you know what's going on in the world, this kind of, well, don't know if it's called the globalization, but yes, the blocks, the multipolar world we are calling. I don't know if you know what reserves are, how they work, but yes, having something that keeps its value, no matter whatever factors are doing, that keeps its value and can be sold at some point, like gold, or like it could have been dollars, or like it is dollars right now, our biggest currency reserves. It's good for a country, for an economic zone, to protect its currency, its economy in a bad economic scenario, in a downturn, right? Because what happens eventually, foreign investors start to sell their currency, get rid of the holdings of that country, and so the price of that currency and of that assets start to fall. What a central bank can do, having reserves, is to sell those reserves and protect its own currency and its own assets. Okay. For example, just earlier today, I was reading about Central Bank of Russia that these days starting not to sell reserves to protect the ruble, but to buy them. Is this a good news? Is this bad news? Well, Russia has a huge trade balance. Okay, it has always had. Differently, for example, for US. Why? Because it's an exporter, when they export. So the fact that they can buy reserves, selling ruble against it, obviously because it's the national currency, it will mean that they have enough reserves to build up a cushion once again. Okay, so I wouldn't really say that it's something so bad, but probably wise monetary policy. But you know that Nabiulina, before entering the war, has been elected several times as the best central banker in the world. First woman, by the way, being a central banker, if I'm not wrong now. Also, the new Turkish central banker has joined the club. I would talk to you about dollar, Turkish lira, but you know the environment is also variable. But you know the environment is not that good. We decided for protecting you, our clients, from possible shocks. Well, to limit somehow the trading in this dangerous environments. But let me say, if you have any other question and not only gold, please go ahead. I will be happy to try to answer if I'm able with that. Favor, come on. I'm making a stupid. No. What I wanted to do, yes, let's go with some major currency. Well, listen, before going with some other major currency, as I before being moved, let's say, to gold, I was talking about indices. VIX, the VIX has been depressed, at least at the beginning of summer. It's in a clear downtrend. The volatility is going down. And yeah, but seasonality favors this future of volatility. It's a monthly future. Take care. It rollovers. It has expiration once a month, the second Tuesday of each month. So if you wanna get involved in this, I know many traders like it because it's quite volatile. Not to say that it's very volatile. Let me check just to this is implied volatility. So just yesterday, for example, it moved from an open at 16 and 16 till a high at 18.50. This is $2.30. That means that it went up more than 15%, 15% at some point of the day. Realized volatility on implied volatility. But well, it's starting to picking up a little bit. This area between 16 and 70 is very nice, important, because it has been before the recent break the level where traders were starting to buy this future, starting to protect against falls of the SP 500. That has not been the case this time. We break down and we went back to levels last seen before 2020. But right now we are back there. Today apparently it's going a little bit down. I think with the movement that we were just checking during the last minutes of Nasdaq, and I suppose SP 500 it's the same. It could. It's about yeah. It's already starting to go up a little bit. But yeah, okay. Leave the VIX and go to dollar. Why I have this? Why I have a Bollinger Bands? They are very useful, the Bollinger Bands, the fact that I like to have a clear view. And sorry, let me see if I'm able to delete this indicator. And I prefer just not to have it in front of me, of us, of you. Dollar index. Dollar index, once again, look at where we are right now. We are testing that trend line. The trend lines started at the end of 2022. This red line, we are hovering around there. Okay, I believe that technically, at least, there could be some more room, at least to the upside. Probably this channel probably is more worth monitoring. I'm sorry for you, comma. If you, I mean, sorry, because okay. So, let's say the comma, this is a client of ours that's interacting here, is saying that he had some bad trades, let's say, no comma, with gold. Yeah, it's not that gold has performed bad, and it's that you probably need to better manage risk. Well, let me go back. Well, I know I won't go back to gold now, but try not to put everything, all your eggs in one basket. I mean, knowing the kind of volatility. Let's go back to gold, profiles, commodities, and okay. Look, I'll show you one thing that I'm sure many of you already knows. Other won't. This one is the ATR. ATR, average true range, means this is one of the easiest mathematical indicator that you have. Oh, what happened? Sorry, I was not. Let me see if I can change something so you can see better. I don't know if you see it better, but anyway. What is this? This is the difference between the high and the low of the day. Okay, high of the day minus low of the day. Basically, how much the instrument moves during the day. You can here you can probably see ATR type 10. This means that this is what I'm having here is an average of the last 10 days. Okay, you can. Well, I won't change it now. Sorry. You can modify this according to what you're looking for. Anyway, this indicator tells you how much does gold or any other instrument move per day. What is telling you here that on average, during the last 10 sessions, the difference between the low and the high has been of $19 right now, and it's going up. No, it's going up from 16, meaning it has been 1%. This cushion from low to high, from high to low. Now you know that. Imagine that you are new in trading and don't act correctly. Let's say. Imagine that you buy the high. You think you see it's going higher, you buy, and it turns out to be the high. So what is happening during the last 10 days is that from that high, on average, it has moved down 1%, about $20. So when you are entering the size of your trade, you should know this kind of information. You should know that it could go down at $20. Okay, from that. How this will reflect in your profit or your losses? If in the worst case scenario, imagine that you bought the high or sold the low. In the worst case scenario, so a 1% move against you, how much will you lose? how much of that, how big is your account? Can you do that, or you should change, or more than change, tweak, adjust the size of your trades? Seems like one of your streams is having connection issues. Well, let the IT solve it somehow. Ah, no, already solved. Okay. And of course, here you can set also this indicator as well. Here I have set it at I have set it at 10. Let me check indicator list, average true range at 10. Why? Because it's a period short enough, fair enough, short enough, long enough for what I want generally to know. But I can say set it at one period. This is simply the difference between high and low every day. Okay, so oh, sorry, let me check. So you can see that on a daily basis we are moving roughly from gold is moving roughly through movement of $11 per day from high to low to, let's say, a movement of 41, let's say $45 per day from the lows to the high. We had a lot of days recently. Here, look here in June, look here in May. More other days with moves of $50 from the low to the high. It's worth approximately 2,000, let's say, so to keep things simple. We're talking about a 2.5% move from the low to the high of the day. More recently, we're talking of on a daily basis of a move bigger than 1%, 1.2, 1.3%. But once again, what I wanted to get, according to the logic of what you are looking at, you can change the properties of the stuff. For example, now I will switch the ATR to 50 moving average, and all of this will give you a different indication. The average of a move from high to lows during the last 50-day average is coming down. So actually, volatility goal is coming down. All right, let's say somehow. But anyway, all of this to reply somehow, comma, to your question. Yeah, it's not that okay, gold went against you, but you have to know this information before entering the trade, because probably you're trading too heavily. You have been trading too heavily, and I mean, you cannot be perfectly right. Me, I'm not perfectly right. Like, you cannot exactly get the high of a low of a day, of a month, of a week. But what you can do is try to avoid that error, that mistake, that noise. Let's say blow your account. Should not happen at all. These kind of things. Well, before going back to the dollar, let's, as we are here on the commodities page, oil, crude oil, still pushing higher with overcuts, 6 action taken during the last, since October of last year, OPEC Plus has made 6 interventions, vocal or factive intervention. The last the last OPEC Plus cartel meeting at Vienna, they always meet at Vienna. Production cuts from Saudi Arabia has been confirmed and extended in September, probably will deepen. Russia will keep on cut its production by 300. Well, anyway, let's leave this apart. The price is going up clearly. The trend is very strong right now. I was writing one thing about oil the other day, and I said that while the most common, the most possible scenario should, or would make sense somehow, the price to yeah, to consolidate here. We are between in an old range of prices between 83 and 73, the widest one, with some important zone, support zone at 76, 77, let's say. But the strength of the movement, plus the determination of OPEC, the fact that despite of the Chinese slowdown, apparently all the oil lost on that side is recovered from the demand in India. The fact that the demand is expected to be at all-time highs for the second semester of 2023, above 102 million barrels per day. That is around 15 billion liters of oil per day. That's what we consume. Anyway, so always, as what we're interested here is the price. Does make sense? Well, does make sense. Would not surprise me the price action to continue and to keep go higher, and the next levels would be around 87, and why not 93. Well, so it's always a bad idea to go against the trend. Once again, I would be cautious shorting this. I would be cautious shorting this absolutely. Right now, there's no signal at the moment of any reason for shorting it technically. Yesterday, have you seen yesterday, for example? It's going down and the bias pump went up. Appeared immediately. Pump, 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 pump. Well, by the way, wait, I have this. What is this? Ah, here it is. Here's the trend line of 1 hour. Perfect. Okay, it has been really clean. The trend line was here. The trend line, we started to buy. Pump, 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 and it's up. What I was talking about ATR previously. How much does oil move? Oil moves a lot. From yesterday in the late afternoon or mid-afternoon, a low at 79.60. Right now we are trading at 83 and 23. That's it. $3.60. Sorry, a little bit. Well, $3.60. That means more than 4%, 4-5% in less than 24 hours. By the way, it can do much better. It can move much more. The oil. It's nothing strange. 4-5% in 24 hours. It could actually move 4-5% in a couple of hours. Sometimes this instrument. So when you place your trade, be careful. Be careful on the sides. Be careful on the sides. Anyway. Done with, anyway, you can see 83, 85 is the resistance level. Done with commodities, also because we have less than 15 minutes to go. So let's move to another thing that is quite first. Sean Kane first. Well, yeah, first. Let's move to dollar. Okay, we were here on dollar index. Dollar index. Let's have a check this channel. Check this channel. It's going up, even if the first trend line is broken. I mean, could happen. Some more strength. Some more strength. Not a lot of it. Not a lot of it. Let's say 1 more percent. 1 more percentage point. We will have the 200 moving average there. It's sloping down. Downward, so let's see that. So as the dollar, it's still a bid. What happened to euro dollar? It's old. It's offered. It's offered. This is interesting to follow as well. Once again, because in this case the trend line is cleaner. It's cleaner. It has been tested a lot of times. So it's quite cleaner, and the price is hovering around there. If it will be lost, it will be lost soon. It will be a nice signal on the midterm, or otherwise, if it will rebound, the same. I mean, it's just over there. It's on at the price that you are you're interested to monitor the price, all right. Cable, GBP dollar, same stuff, same stuff. It's hovering just on a long-term trend line. And once again, this is a great place where to great price, where to look for it, look for the break to the upside, to the downside, or for a rebound when it will finally take steam. Because you can see that during the last days it's not moving at all. Its volatility has been depressed. It's moving sideways. And, so why this happens? Because people, investors, they don't really know what to do. They're waiting the other somebody else make the first move. Another interesting thing that we've been tracking for days is dollar yen. Here, look how it this trend line is very strong as well, rebounded. I said it a lot of time. Yen is structurally weak. The divergence with the differential, the interest rate differential with our developed markets is huge. I mean, this move from the Bank of Japan of letting the 10 years probably had trade up to 1% could have an effect on the long term, especially and more related to the holdings of U.S. Treasuries. To be honest, some of them because Japan has a huge financial sector, and it's important worldwide what their players is doing. So there could be some selling, some repatriation of some funds as well. But anyway, still it will be something of a long term this way. Yen depreciating, dollar yen going up. Yeah, have a look at 143 and 85. Have a look at this one. First break will take us to 145. A break of it will give wings to dollar yen, but will probably force Bank of Japan to do something more than it has already done. All right, let me put my nice face, well, not so nice down here. Which are currencies we can cover? Hi, Samuel. How are you, sir? All good. Our currency, we Aussie below, not at the low of the year, but below where it has traded, at least for, well, I cannot make this calculation by just visually, but it looks like 80%, 85% of the time since February traded between 66 and 68. Now it's below. I think something very similar happens to New Zealand. That should be, yeah, something very similar. Not to the lows, but below the important 61 level. So anyway, on dollar is a moment of uncertainty, not clear direction. Right now, there has been already some buying activity in the last weeks / months. In dollar now, for the next leg to happen, some catalysts should appear eventually, and no, this is, well, nothing but tomorrow we will have CPI. CPI in the US. Will be probably one of the most interesting data of a week. Let me check one thing. Well, we will have also UK GDP on Friday, industrial production and so on, and okay, Michigan consumer sentiment as well. But yeah, CPI, it's expected to pick up a little bit on a yearly basis, up from 3 to 3.3%. I suppose I haven't dipped into it, to be honest, but I suppose it's more related to mathematical stuff. I mean, the calculation against the last year than to a real pick up in prices, even if, as we have said, energy prices have gone up, and also other kind of prices have gone up, especially agriculturals. We're not offering it, but rice this morning hit an all-time high in Asia. So yeah, for example, cocoa, cacao also is very high. I don't know, it's not an all-time high, but it's extremely high. Some year highs for sure, some months highs for sure. Well, let me think. We have covered some indices, some gold, Titan, Swiss against yen. Well, that's a hard trade, Titan. Good morning, as a first thing. That's a hard trade, and I'll tell you why. Because these are two currencies considered to be safe haven. Well, the yen probably not anymore. They are good for carry trade because both have a relatively low interest rate, even if right now the Switzerland one is almost 200 or 200 basis points higher. Give me a second. It's 2%. I know 175. I don't know why I was thinking it was already at 2%. 175. So that's a differential of 1.85. Well, let me go. Let me go to it. Obviously, Switzerland has been performing much better. Has been also well. We were talking about reserves earlier. Bank of SNB, the Swiss National Bank, has not pushed its foot so strong on interest rate. What it has been doing. It has been selling reserves, its reserves, plenty of reserves, for buying Swiss franc. Buying Swiss franc, why doing that? We're talking about why it's good reserves, it's good for protecting the economy, to protect the economy against inflation. Obviously, a strong Swiss franc means imports are cheaper. And inflation and rise in price is less reflected into inflation data. So I don't know what you would like to do about it. It's best little to say about Switzerland against yen, Titan. Well, let me show you. Here you are, Titan Sergi. Hope I pronounce it correctly. There's little to say, in meaning that it's going one direction. It's totally going one direction. I will. One thing I will advise not to everybody, not to think that something will go down because it's gone too up already. But something is expensive, so something that has gone up could go even higher, and for a long time. Market can stay irrational much longer than you can stay. What's the word? Sorry, really. Well, but you can money said in simple words. So what it's doing is going only up. Yeah, we can notice a slight divergence, but as for now, there's little mean for the yen to appreciate, and so for this cross to go down. Trend lines are really steep. I wouldn't do anything against the trend before the trend is broken. The moving average is broken. As for now, the trend and the moving average are a good buying the dip reference. To the upside, I mean, it's quite clear, a clear break to the upside. And a clear break, when one say a clear break, means not intraday. It's always, for the break, you need always to wait for the confirmation at the end of the day. By the way, patience could run short. Sometimes it's also a good idea to wait more than one day, a couple of days, 2-3 days, for avoiding false signals. So I would say that for this to revert, we must see something from the central bank side, especially from the Bank of Japan. From the Bank of Japan, we were just seeing earlier the levels against the dollar let's say 143 and 80, 145. If we see that pair breaking to the upside, probably at some point sooner than later, Bank of Japan will need to do something, and yeah, if it could spark a move, a strong move here. But wait, you see, one thing, please notice how when there's a red candle, it's big. So it goes up, it's go up slowly, relatively slowly, but when it's sold, many have been the days of big negative performances. All right, well, that was the intervention, by the way. So as we are very close to the end, I wanted to welcome, first of all, Lindo Kule Mabona, and why using indicators? Lindo Kule Madonna, that's a very smart question. Listen, in my opinion, analysis should be done at 90%, 95% on price. Indicators are derived from price. First of all, when you use an indicator, you should even understand the mathematical formula behind it, where that number comes from, to get a meaning of that. Indicators is something that give you the last mile, the extra mile information, while the biggest part of information should come from, yes, Tita, price action is the key. Yeah, price action is the key. Absolutely, price action, correlation between markets, absolutely the keys. Indicators give you that last extra mile when you have run your 41 kilometers, your 40 kilometers, but last 2-3 kilometers, maybe you need the help of an indicator. For example, what you see here is Swiss franc against yen. RSI is diverging. So the relative strength index, please go, you will find the formula on internet. Just Google it. And you will, it's not the place here for, but try to understand how it works. Anyway, the relative strength, the strength of a movement is decreasing. So this indicator starts to tell us that the move is extended. The move is extended. So even buying going long could start to be a little bit risky. I mean, it's up from the beginning of the year was at 137, now at 164. It's 25% higher the Swiss franc against the yen. So this is the kind of things that indicators can tell us, can help us. So when everybody has indicators that loves most, understand most, it's important to be confident with the indicator you're using. And yeah, but once again, price action should be 90% of your analysis. Price action and interaction with other markets. You should always look to more than one market. Well, anyway, Madame Messier, our hour has gone. We have finished with this cross. This is any point where fundamentals can overtake price action. The long term, fundamentals won't help you on your trading for sure, not on the intraday trading. And, by the way, as I talked about the divergence, RSI and price can stay in divergence for months on a daily, for 3-4 months. Just keep it in mind. Fundamentals are good for the long, for having a perspective. For example, in my opinion, yen is structurally weak. Why? Because of a lot of things I want to tell in this last minute. I just mentioned the differential interest rate, but also the structure of debt they have, 260%, raw material. So you have a long-term view. For example, if you have a long-term view that yen is structurally weak and dollar yen should go higher, you will prefer to buy low and sell high instead of selling higher for buying lower. Right? I don't know if it's clear the difference. for having an understanding, an overall understanding, fundamentals are nice. For intraday trading, forget about fundamentals, forget about everything. If you get into a position for scalping or for intraday for a couple of days, manage your risk through trends, this kind of things. What was that? Yeah, it was oil, the one that we just see, and then I'm finishing, and then I'm ending this. It was oil. No, we just. Where is the trend line? Wasn't the trend line here? We just. Wait, has it appeared? Wow. Ah, here it is. Okay, so. Well, by the way, to be fair, let me do another one. Where I stop. Pim pum pam. To be fair, probably yesterday you would have had this to one. At least me, eventually, if I would have traded on an intraday basis, I would have these two ones, being the tougher one, the one with more sense, the most clearly tested in the past, being this second one, the low one. One tested just recently, showing that what does this mean? What does this two break of the main one means? That sellers are trying to push the price lower. This is what it means. But buyers, even after a break, started to buy again. But there's the selling pressure. There are sellers here. Right. So yeah, short term. You don't care about OPEC, you don't care about the global demand. You have your lines, I don't know, let's say that you already had also this darker one. So let's say it's not, by the way, this is a pass. So you would have put, if you were patient enough, some buying order close to 79 and 80, maybe a first part of the order close to 8 and 50. And just below it, you could have, if the price would have done, you would have known that you were wrong, All right, and that's it. So yeah. Anyway, I think time is over. Thank you very much for your questions, for your interest, to all of you, to Titan, to Lindu Cole, Samuel, Jerez, Ticom, FX, I'm sorry, Muzumbi, Blo. Hope you had, you solved the problem, so that's great. And yeah, next week, Andrea will meet you, and yeah, don't miss it, and that's it. Have a lovely day ahead, all of you. Bye, and may the peace be with you. Ciao.